Hey everyone, good morning and welcome back to Daily Crypto News. It's May 7th, Tuesday. I'm Sarah, your host. From this week, I'm taking over Tuesday and Friday on DCN. I hope to bring more interesting news and diverse viewpoints for you. Before we start, don't forget to give us the 5-star on your favorite podcast platform, subscribe, and DM us on Substack. Let's get started. A little bit of Bitcoin price news and prediction won't hurt, right? Bitcoin price upswing in these couple of days has options traders reconsidering the possibility of reaching the 100K level at some point this year. I was betting 100K at some point this year. But anyways, there has been a notable increase in demand for Bitcoin call options on Deribit exchange and over-the-counter OTC networks. These options are specifically targeting a rally to new highs, potentially surpassing 75K and even reaching 100K. QCP Capital said in a note on Monday, quote, "We are seeing some bullish follow-through in volatility and rates following the reversal bounce from Friday and into the weekend. BTC risk reversals have gone positive, calls more expensive than puts, and there has been a renewed demand for BTC September expiry, 75K and 100K dollars calls." That's very interesting. September is still a little bit far away, but still, I hope to see 100K or break 100K at some point this year. A call option, as you know, gives the right to purchase the underlying asset at a predetermined price on or before a specific date. A call buyer is typically bullish on the market and a put option buyer is bearish. So it means that as time goes by, the option buyers, specifically call buyers, are seeing the market bullish. According to this article published today, the 7th, more than 150,000 call option contracts worth $9.5 billion were active on Deribit. That's more than 2 times the open interest in put options, a sign of bullish market expectations. I'm more of a kind of a longer term investor. I don't really trade day to day or even week to week or even month to month. So this is a very good news for me. I hope you do too. If you have a different opinion about how the market's going to be, I would love to know. Sarah at dailycryptonews.net. The SEC continues its regulatory crackdown against crypto, or rather, it has never been easier. This time, SEC is targeting traditional finance firm Robinhood with a Wells notice filed on May 4th. While Robinhood is a TradFi firm, it has been quite revolutionary and I would say successful in providing various crypto investment products. A Wells notice here is a warning the SEC sends firms stating the agency is preparing to bring an enforcement action against them. Robinhood received its notice for allegedly offering unregistered securities on its platform. I guess it means that Robinhood has been offering the assets that SEC sees as security. The company stock, however, stock ticker HOOD, saw a slight drop and then recovered, traded for $18. Robinhood posted a reply early Monday morning stating, quote, "After years of good faith attempts to work with the SEC for regulatory clarity, including our well-known attempt to come in and register, we are disappointed that the agency has decided to issue a Wells notice related to our U.S. crypto business," end quote, said Dan Galler, Chief Legal, Compliance, and Corporate Affairs Officer at Robinhood Markets. According to the firm, Robinhood's crypto arm has already made difficult choices not to list certain tokens or provide products such as lending and staking, and that the company had heeded the SEC's calls attempting to register a special broker-dealer with the agency. Wow, they even consider lending and staking as a TradFi firm, which was kind of revolutionary, I would say. Anyways, let's see how this goes and then I'll report back with more news. Many interpret BlackRock pouring $100 million into Ethereum as a sign that institutional fund is finally coming and tokenization will become true on permissionless network. At least we now know that institutional fund are interested in blockchain technology and tokenization. However, while this news is worthy of the headlines, the reality is tokenization is predominantly on private, permissioned blockchains. If you see some examples, this article lists down actually quite some good examples. First off, the Hong Kong government's $100 million tokenized green bond used GSDAP deployed on the privacy-enabled blockchain Canton. And secondly, Goldman Sachs, BNY Mellon, CBOE Global Markets recently wrapped up a few pilot programs on the same network. HSBC has used the Orion digital assets platform to tokenize gold. BlackRock has used the private tokenized collateral network on JP Morgan's Ethereum-based Onyx to tokenize shares. So we can see that they have interest. But how come they're using private blockchain and don't come to our permissionless DeFi blockchain networks? I think the answer is honestly quite easy. Private networks operate closer to the existing financial infrastructure and can facilitate compliance much easier. Of course, on the other hand, public blockchain still has some issues to solve. Let's take Ethereum, for instance. It has come a long way with merge, layer 2, scalability, blah, blah, blah. Regardless, we all agree that its speed and transaction volume are way lower than the standard it has to meet to involve regulated institutions. And not to mention the fact that in terms of governance, all the rules that you have to tweak if you wanted to will be quite impossible, I would say. It's always good to take a step back and have a reality check. If you're an investor, then I think it will be interesting to see which layer 1 is ahead of B2B private blockchain solutions. In some other articles, I have mentioned that some layer 1 blockchains have been kind of under the water and then have been working on the B2B solutions on the private blockchain. I think that's a very healthy collaboration as well. I mean, the connection between the growth of public blockchain and private blockchain cannot really go together. But as long as there is a little bit of penetration in the market to accept blockchain technology is a good move. That's all for today. Now let's see how the markets are doing.
Here comes the money.
Here we go. Money talk.
In the fear and greed index, we are staying at around 68, a little bit lower than yesterday, but still in the greed. And if we go to CoinMarketCap cryptocurrency chart, what happened in the last 24 hours? According to the market cap, we have Bitcoin in number 1. And in 24 hours, 1.3% down, and the price is $64,215.06. Number 2 is Ethereum, down 3.1%. The price is $3,108.63. Number 3 is Tether USDT, 0.12% up. The price is $1. Number 4, BNB, 1.24% down, and the price is $592.46. Number 5, Solana, 3.48% up, and the price is $157.43. Number 6, USDC, 0.06% up, and the price is $1. Number 7, XRP, 0.51% down, and the price is $0.5413. Number 8, Dogecoin, 4.25% down, and the price is $0.1591. Number 9, Tonecoin, 3.75% up, and the price is $5.94. Number 10, Cardano, 3.62% down, and the price is $0.4536. And this chart is from CoinMarketCap as of 5 a.m. EST. Thank you for tuning in today as well. Hope you learned something with me at Daily Crypto News. Share your feedback, opinion, DGen news to Sarah@dailycryptonews.net anytime. Until tomorrow, happy hodling, everyone.